Nvidia just announced their Q3 earnings. We have listened to the conference call. We have gone through the numbers. We'll take a look at the revenue trends. We've also looked at the company guidance, and we're going to look at this from a technical perspective. So the question on investors' minds now is not if Nvidia can continue to perform well as a stock, but can it outperform like it's had over the past 2 years, where you've had massive outperformance versus just about any stock, but certainly the broader stock market and even the NASDAQ? That is going to be the question after the company announced somewhat disappointing Q4 guidance. We'll talk about what that means as we move into next year. Can the company achieve the high expectations that some have for it? Or will this company come up somewhat short, leaving the performance of Nvidia stock in a place that it just hasn't been over the past couple of years? We'll talk about that and more on today's video. What is going on, investors? Hopefully, guys are doing well out there. Got a big one for you today. That's obviously Nvidia. Over the past year, shares of Nvidia up 189%. Year to date, it's even better, up 194%. This is the type of outperformance that we are talking about. This is the kind of outperformance that the market has been expecting. So in some ways, we're spoiled a little bit because even over the past 6 months, shares of Nvidia up 53%. At some point, this massive outperformance has to flatten out a little bit. We'll talk about what it means and what it will look like technically when we get to that segment. But we've had these Q3 numbers come in after the bell. Revenue came in at $35.08 billion. We'll go through the numbers here in depth because this is just absolutely sensational. That was 93% growth year over year. But one thing to point out is quarter over quarter. Now, as the numbers get bigger, the beats from a percentage basis get smaller. But we were up just about 17% quarter over quarter. And probably the most disappointing thing that Nvidia announced is their Q4 outlook, which was their revenue outlook for the Q4 is expected to be $37.5 billion. Now, Wall Street expectations was right at $37 billion. So you can say this was a beat in terms of the Q4 guidance, but many people, including myself, was thinking this company had a chance to come towards that $40 billion mark on that revenue. Now, look, the company could put up a surprise. The supply chains could loosen up. As they talked extensively on the conference call, they have hundreds, if not thousands of suppliers working to deliver these chips to consumers and customers. Well, maybe this 37.5 is somewhat of a sandbag, but it certainly is a disappointment. In fact, when that number crossed, shares of Nvidia's headed lower. Now, it doesn't bring into question necessarily the Wall Street estimates for the next several quarters as you move into next calendar year. $40 billion, $44 billion. I think these are all very much achievable for Nvidia, but what does it bring into doubt is the high-end estimates for $45 billion in the April quarter, $52 billion in the July quarter, and as you move into the back half of next year, 60, 70, potentially $80 billion in revenue does bring that into question just a little bit. To give you an example of why this guidance was somewhat disappointing as you look over the past several quarters, really dating back into a year or so ago, the company from a total revenue perspective has been adding very consistently right around $4 billion, somewhat as high as $5 billion or more to the total revenue side. Now, most of that revenue growth is attributed to the data center and the explosive growth of this company's products inside of cloud service providers like Microsoft, Google, Amazon, Oracle, and many others. And that explosive revenue growth appears, though, that it's starting to flatten out in the Q4 as revenue estimates at $37.5 billion would just be only $2.5 billion of growth. Now, obviously, when these numbers get larger and larger, the percentages from a dollar perspective is still relatively large, and we do expect growth at Nvidia to flatten out at some point, but it certainly looks, based on the Q4 estimates, that maybe growth has started to stall. Now, the company addressed it in the conference call, and I came out with a highlight thread over on Twitter, otherwise known as X. Be sure to follow me on all the platforms. Those links are always down below in the descriptions. Now, shares of Nvidia started the conference call down about 1%. Cloud service providers like Amazon, Microsoft, CoreWeave, and Google, among others, represented about 50% of the data center total purchases. That's about what you would expect. Now, Blackwell is in full production. That is the next generation chip. Following the wildly successful Hopper design, about 13,000 samples were shipped to customers. Now, multiple times on the conference call, they talked about Blackwell demand, saying that it's outstripping the supply that they can deliver, and that Blackwell demand is quote unquote staggering. Now, Microsoft will be the first cloud service provider to offer Blackwell to its customers. Now, Nvidia did a lot of name dropping on the conference call, dropping dozens of companies that you would expect, but it did go over Accenture, which is a consulting firm, ticker symbol ACN, in its AI efforts in detail. Now, China export controls. Been following this channel. We've also got a secondary channel over at Equity Empire. We've talked about these China export controls that were put in by the President Biden administration. Some of them tailed over or carried over a little bit from the previous Trump administration. Those export controls mean sales of Nvidia products are well below what would be possible without them. So there's kind of your bull case. Not only applies to Nvidia, but also the equipment makers like ASML, certainly TSM and others. If President Trump can negotiate something with China in order to open up the market for these high-end GPUs, whether or not he'll be willing to do that, I don't think that's certain right now. I think we'd probably lean towards the possibility that maybe he would come to the table with something, but chances are the status quo set by the President Biden administration really controlling the export of high-end chips into China will probably maintain itself at least into next year, and so that means China sales for Nvidia will remain lower than what they could be. Now, networking revenue, this was a very interesting revelation. Networking is essentially the connection between these different GPUs into a large data center. A lot of the research that I read is that a lot of these cloud service providers, they don't want to use NVIDIA's networking. They want to use the chips, but they want to network these things together themselves. That quarter over quarter networking revenue was actually down. That's probably bullish for a company like Broadcom, among others. Now, revenue estimate of $37.5 million. That was that Q4 outlook where the company announced $37.5 billion worth of revenue. That includes several billion dollars in Blackwell revenue. Now, NVIDIA's gross margins will be in the low 70s on the initial ramp of Blackwell. In full production ramp, which they projected maybe towards the back half of next year, you'll return to mid 70s gross margins, which is about where the company is at the current time. Now, NVIDIA will attend the Consumer Electronics Show in January, along with myself. Jensen will give a keynote. I don't know where they're going to do that keynote. They could probably put it in one of the massive arenas located around Las Vegas, and it would still probably fill up. So I am going to try to get in that room. I'm probably going to have to wait in line probably for several hours, but I'll do my best. Now, on the question and answer section, how has scaling around large language models stalled? So this is something that you probably heard about if you follow OpenAI and all the large language model makers, Anthropic, confirming that large language model improvement has basically stalled. Jensen says that post-trained scaling used to be done by human interaction, basically putting in test queries and correcting that from a human perspective, is now more based on synthetic data, and that the next generation models are starting with 100,000 Blackwells. That's about where the previous generation of models kind of ended. Now you're starting at 100,000 Blackwells, which is obviously more powerful than 100,000 Hoppers. Now, Blackwell's heating issues, that became relevant this week as reports that Blackwell servers were starting to overheat. NVIDIA has a 1-year refresh, so they're planning to update the Blackwell within 1 year's time, basically release a new version of it. Question was, do the heating issues and other technical issues around Blackwell, does that impact the 1-year refresh timeline? Jensen Huang saying basically no. There was a question if Blackwell ramp will outsell Hopper starting in the April quarter. Jensen didn't want to get into full details on that, but I think us as investors can assume that Blackwell will start outselling Hopper probably as soon as April. maybe even sooner than that if the company is able to deliver enough units. Now, how many quarters of Blackwell shipments will be needed to satisfy demand? Because NVIDIA went over multiple times on the conference call that Blackwell demand was just so far and above what they could meet from an expectation perspective, not only from TSM being able to manufacture it, but also getting co-packaged and delivered with all the bells and whistles. Question was, how long will that last? Jensen basically going back to kind of a canned statement that he's made that they're going to build out about $1 trillion worth of data centers with GPUs because about $1 trillion was spent on the previous cloud. Now, what will large language model inference projects in the future look like? Will inference outgrow training? Because right now, the bulk of the compute power is used kind of in training, and because there's not that many AI software applications being used on a daily basis, we're still using traditional compute by a large margin. Jensen and the rest of the AI community is basically betting that AI will become the dominant compute platform, and that is what will continue to fuel NVIDIA's success. Now, networking was down 15% quarter over quarter. The company kind of sidestepped that question and said that there was a slight dip down, but it should be back on track in future quarters without providing any real details. Now, growth will be 7% from Q3 to Q4. We've pointed that out on these revenue estimates that it is a slowdown sequentially quarter over quarter on that revenue side. Will that reaccelerate as Blackwell ramps? Jensen Huang also completely sidestepping this question, saying that they basically only work one quarter at a time, essentially avoiding trying to answer that question. And now that's it. The stock was down about 1.2% in the after hours. That's currently where shares are at the current moment. Now, just anecdotally, this was probably the least energetic that I've heard Jensen Huang on a conference call. In fact, he let the CFO speak during the first half when Jensen has actually gotten on there and been kind of the hype man from moment one of the conference call. I don't know if Jensen Huang was sick like I am. I don't know if he's just bogged down with all the Blackwell ramp and all the work that has to rely on that. Maybe he's saving up energy for the Consumer Electronics Show in January. So when I'm in the audience, he's at full energy level. But I did notice on this conference call, maybe all the work that the company has done to explode its business over the past year or so has taken its toll just a little bit. We might be nitpicking a little bit, but I did notice a slightly lower energy Jensen Huang on the conference call. Now, revenue came in at $35 billion. Again, year over year, that's explosive. 93% growth year over year. Yeah, just $18.12 billion worth of revenue last year. Now, because of those massive gross margins that this company has, you have gross profit sitting at $26 billion. And because the products basically sell itself, and the fact that this company has been working for more than a decade on this type of product, research and development went up to $3.4 billion, and your selling general administrative is actually under $1 billion. Take that, Intel, which spends more than that to generate far less revenue and profit. So your total operating expenses over at NVIDIA went from $3 billion up to just $4.3 billion. So $26 billion of gross profit minus off 4.3. And folks, we get $21.9 billion of operating profit. That's more than double where you were last year. Every additional dollar in revenue, a ton of it, I mean, we're talking a vast majority of it actually flows down to operating income. You want to flow down to a net income. You're painting almost the identical story. These financials are as good as it gets. As you can imagine, the balance sheet over at NVIDIA is as good as it gets. I'll just sum this up very quickly for you. The company has total, we're talking every liability that the company has sitting at $30.1 billion. Just in marketable securities, company has $29 billion. In straight cash, homie, company has $9 billion. So they have a well in excess just in cash in terms of beating their total liabilities. They also have inventory ticking up over the last year, or since January, from 5.3 up to 7.7. That's probably a good thing considering how well the products are selling. From a balance sheet perspective, as you can imagine, over at NVIDIA, there's nothing to worry about. Now we move down to a cash flow, and you can imagine operating results were sensational. The balance sheet looks great. Wait till you look at the cash flow statement. For a 9-month period, we pulled down $50.8 billion worth of net income. This is why this has turned into one of, if not the most valuable company in the world. $17.5 billion of net income last year. Just amazing growth year over year. You do have some stock-based comp and some other stuff, but it's actually not much. Look at your operating cash flow. $47.5 billion. So off $50 billion of net income, almost all of it flows down to operating cash flow. $16.6 billion last year. The good news is this company is not an idiot like Intel. They're not trying to build fabricating facilities. So they're basically spending this $47 billion. They have nothing to spend this $47 billion on. Okay, they spent $1 billion on some acquisitions of some smaller companies or getting small pieces of CoreWeave and some other startups, but that's basically nothing. They did have to purchase some property, plant, and equipment, but it was just $2 billion over the past 9 months. Again, we made $47 billion of cash operating the business. So what are they going to do with this? This is going to keep a bed of support underneath the stock for a really, really long time. So you can have somewhat stagnant or just single digit or low double digit growth on the revenue side, but because they have 75% gross margins, they are just going to be minting money over at Nvidia. So what are they going to do with the money? They're going to rebuy the stock to the tune of $25.9 billion over the past 9 months. That's a pace of nearly $10 billion a quarter. So that'll drive up EPS because as you buy back the stock, you're retiring those shares that you have to measure against EPS. So that'll continue to drive up that EPS. It'll drive down the price to earnings. So any price to earnings that you see on a website has to factor in. Maybe some of it does, probably most of it doesn't. Number one, that the company tends to beat their EPS estimates. They did by about 6% in the most recent quarter. And so yes, you're trading it 51 times forward on this one, but it's probably closer to the 30s, I would guess, after you factor in all the buybacks and the margin expansion the company will have as you move into next year. They continue to pay some dividends, not a big one, a penny per share, and you do repay some debt over at this company. Everything from a financial perspective at this company is exactly how you would expect. Now, in the after hours, oscillating between 1% and 2% declines, no big deal. From a technical perspective, you are walking up this channel line that we've made since 2022. This is a very steep channel. I want to zoom out to a 1-month view with NVIDIA and show you how steep of an uptrend we've been in really since 2016. There has been some deviations, certainly in the 2019 timeframe, certainly in early 2023, but we have been gapping up almost in hockey stick 90-degree like formation. At some point, this has to give back a little bit. I do have kind of a longer term uptrend that this company is trading up above. I'm not anticipating us pulling back to that trend line really anytime soon. My guess is we'll kind of grow into that probably over the next several years, maybe even the next decade with NVIDIA. Everything looks fine technically. If you have not been in NVIDIA or you want to add to your NVIDIA shares, this can be an area where you might do a little bit of buying. You are underneath what I describe as the middle of the channels, usually described by a light green line. So this can be an area where you buy. You're not far off from the breakneck bottom of the channel where you do heavier buying, which we did back in September. The idea is eventually NVIDIA makes a new higher high, which it actually just did, and you continue to walk up this channel. You continue to hold NVIDIA shares. You can buy it at these levels if you feel like it. Shoot, if you have a massive profit in this one, you probably could sell it if you felt like it. That is because over the past year and year to date, and even the past 5 years, you've had such massive outperformance on this one. For it to continue to outperform would drive it into a valuation that we've just never seen in the stock market. So the company is going to have to achieve some type of valuation that we've just never seen before, or it will have to generate revenue and profits that are just simply not forecasted, and based on the supply chain, based on the complexity of these computer chips, it likely will be a slightly slower grind to these much larger revenue totals than some, including myself, anticipated with Nvidia. There's always the chance that towards the back half of this next calendar year, the company could get into the $50-60 billion worth of revenue. And that would obviously mean much more operating cash flows, profits, EPS. And if it does that, then the stock will probably, at the very least, outperform most of the broader market. That was Nvidia's Q3. Be sure to join us on Fridays right here on the channel for the Feng Stock Recap Show, where we'll go more over Nvidia's efforts and how this relates to the rest of mega cap tech. See you on Friday. Thanks for tuning in, and good luck with your investments.